Hey guys, it's Hans Brunner, First Priority Financial, and I wanted to walk through a tax bill and what it looks like when you buy a new piece of property. So what I'm looking at is, I just picked a property, 1400 Quail Court in Santa Rosa. It's a real property, it's a real tax bill. It's public record, so I just looked this up and got this off the internet, so anybody can get that. So there's no privacy issues here, even though it's somebody's real tax bill. Okay, so where the meat of it comes in is down here. So here's what I've got. The net taxable value is $314,933. With Proposition 13, what happens is you get taxed at 1% of your assessed value. So when you buy a house, you're going to get taxed at 1% of the assessed value from when you bought it. So in this instance, a house in this neighborhood would probably sell for quite a bit more. Let's just say that this house would sell for $900,000 today. But it's taxed at $314,000 because they've owned it forever. But what will also happen is these tax rates down here, the tax rate for the assessed value is 1% of the assessed value. Then you take the assessed value and you've got for the Russian River Dam project 0.007, for the Rincon Valley Union Elementary bonds 0.0235, and Santa Rosa High Bond, Santa Rosa High Bond 2002, and Sonoma County Junior College Bond, all these factors. So we come up with another $22, $74, $110, $62, $59 hike. And what happens is you've got agency taxes of $328.44. That's these. And you have direct charges, and the direct charges are Sonoma mosquito abatement, Rincon Valley parcel tax, and Santa Rosa stormwater. So these are $159.12. Those are a constant. In this neighborhood, I just looked at one that a client is actually buying, and it came up to like $168.14. So they're about $160 in direct charges, and then you've got your agency taxes. The agency taxes, so that the direct charges are flat fee, the agency taxes are actually billed on the assessed value, as is the tax rate. So in this instance, what I'm going to do is I'm going to calculate out what would happen. So this guy, when you look at this, here, let's just actually grab the calculator in here. So I've got 0.007. Actually, let me start with one thing. I've got 1, because that's the tax rate, 1% of the value of the house. So 1 plus the 0.007 plus 0.0235, and you can see I'm getting these numbers from here, here, and here, plus 0.035 plus 0.02 plus 0.0188 equals, and you see 1.1043. So that's the number that you use times the, so it's 1.1043% of the assessed value is your actual tax rate, plus this down here, $159.12. So what I'm going to do is, there's two ways I'm going to show you. Okay. So what I'm going to do is I'm going to plug in, this person's buying it for $900,000 times 1.1043%. So that's $9,938.70 plus, whoops, $99.38.70. Okay, hold on. $99.38.70 plus 159.12. So in this instance, if you bought this house for $900,000, your new taxes would be about $10,097.82 a year if the tax assessor assessed it at exactly what you bought it for. So that's how that works. Let's figure out another thing here. Let's just make sure 314,933 times 1.1043%. So the actual taxes are 3477. So let's go plus. Okay. So that's the actual taxes plus the 159.12. And that's 36, 36, and 92 cents. So this comes out to 36, 36, 88. So it's pretty darn close. It's within 4 cents, 5 cents. So bottom line is that's how this works. And that's how they figure out their taxes, and that's how they figure out the new taxes. So it's very important to do this because as an industry, so we just came up with 10,000 and hold on one second. We just came up with $10,097. And what we do as an industry is we go 900 times 0.0125. We usually do is 1.25%, and that would be $11,250. It's not a bad number to figure it out, but 10,100 is better, and that is $1,100 a year cheaper, and it's almost $100 a month when you break it down on a monthly basis. So do your clients a favor and figure out the actual taxes. And the other thing is when you take a property that's in Cloverdale or Guerneville or many other municipalities, or a lesser expensive house where some of these direct charges are higher dollar amounts, then the 1.25% estimator is too low. And then that's a problem, because if your client qualifies at the 1.25% estimator, but they don't qualify on the actual, well, they won't get past underwriting, and they won't pass go. They won't collect the keys to their new home. All right, thanks.